Welcome again. This is Money, Stocks, and Economics. We're going to look today to our next company. The next bet in our proposal for stocks will beat the market in 2025, and this is Imperial Petroleum. It's a company from Greece. It works it's a shipping company. It works in the tanker market. So we will analyze why this is a great option. The shipping market, as we saw in our last video, is very complex, and the tanker market is the transportation of crude oil. Have another particularity that makes a little more complicated than already complicated shipping market, and is the oil itself. So the company has boats. Those are called tanker boats. They are 160 deadweight tons is the weight of everything, and they put the oil in and travel to another countries to sell the oil. As we can see here, they have a lot of boats. So what is happening? As the price of the oil, first of all, the price of the oil is controlled by supply and demand, as all things in economics, almost all things in economics. But the cost of extraction is what regulates the supply. As shallow as the drilling is, the most value they can extract from selling oil. So there are oil in various countries, but the countries with the most shallow reserves are the countries that control the supply of oil, like Saudi Arabia. If you put a needle in the ground in Saudi Arabia, the oil comes flowing out. So is the depth of the drilling that sets the price of the oil. If the price of the oil is high, most countries can drill further, as the cost of the drilling is exponential. It's not the same cost, because as the ground gets tougher, you have to use other types of drills. You have to use other types of extracting mechanisms. You have to create offshore platforms underwater, and the cost of drilling gets exponentially expensive as deeper it goes. So is the when the price of oil is going down, like we can see here, this price of Brent crude oil is going down, there are less companies willing to drill, because they cannot get the money to continue drilling, because the is too deep. So what they do, if they have to drill because of contractual schedules, they lease tanker oils and put the oil in the boats like this. If the price of oil is too low for the time they drill, and they want to storage this oil, they put the oil inside the boats and don't sell it, waiting for the price of oil to go up so they can make a profit. So when the supply and demand is low, people cannot supply as much oil because of the price of the drilling in relation to the price of the oil. So they hold the oil till the prices start to shoot up. As the prices start to shoot up, they sell the oil in the market, and it equilibrates itself again. So why this company is a good investment? First of all, is under book value. So the amount of oil, ships, and barrels they are already extracted surpasses the value of the entire company. So without the ships. So if you take debit off, and only look to the book side, of the positive side, without that, the company should value at least 9, and is trading at 4. So this is a good indication. The company has been making millions in free cash flows and profits. More if you take the profits of the two last years and divide it by the numbers of shares, subtracting debt, you're gonna have a stock that trades to $8 and now it's trading at 4. So it gives you a great margin of safety on the investment. And the Baltic exchange, Baltic dry tanker exchange, is low as well, as we can see here. This is the exchange of freight rates for tanker boats in oil, and is going down. That's why the share was been dragging up. I bought this share a year and a half ago, and I'm making on the share for now almost 200%. As we can see here, let me show you. The company a year ago, I bought it before that, is already making 171 in 1 year, but it still has to go up because it's so undervalued, and all the rates are down. The exchange rate is down, price of oil is down, so the supply of oil is low. Is some kind of strange in oil and tanker companies, because as you think that as the price of the oil goes down, the price of the oil goes down, uh, the demand for oil should outgrow supply. But this happens, all right, but it takes some time because they extract the oil and put the oil, as I was said, in the boats, and they hold there to create a little bit of scarcity. As the scarcity builds up, the price of oil shoots up, and then they sell, and then the market starts again. So let's go all to of the infinite cycle of oil and freight rates. As we can see here, goes up, goes down, goes up, goes down, goes up, goes down. If we zoom in, we can see that is a lot of up and down because of these trades, freights, freight rates, and oil prices. Always up and down, up and down, up and down, up and down. With and then we have large cycles. These large cycles are due to interest rates and macroeconomic change. The big crisis, 2008, the mortgage crisis, 2000 and let's see, 2008 mortgage crisis, 2020 the problem with the disease. So these build-ups are mostly through catastrophic events over time. So as we can see here, it's pretty much stable, but always going up and down, up and down, up and down. So this company has great financials, as we will see here. Total revenue, cost of revenue, making profits, not that much debt, positive interest, as we can see, not that much debt, and making large 60 million, 60 million in profits. So as we can see here, very big asset side, very positive, like boats, oil in inventory, and other things. 124 million in cash, more 50 million to receive, 7 million in stocked oil, and no debt, no debt. This is cost of crew and the operation. This is cost of deferred liabilities and almost equity. The company has a lot of the asset side and no much, almost nothing in the liability side of things, as we can see. So very low risk is being punished because of the Baltic dirty tanker freight and the price of oil, but this will soon get solved, and the share will start to express the true value. Uh, they bought some boats, as we can see here. They bought some boats in 2022, as you can see here, that make this cash flow negative, 180 million to a operational revenue of 40 million. So they make the free cash flow negative, but this is a good thing because they are investing in expansion, and as soon as demand turns, we can see that the company gonna make a large profits. As we can see here, the company has been increasing their profits, right? Because this is because of the freight rates are so low after the problems we have in 2020, but this increased a lot. But the negative is because of they bought a huge boat, and this is already making last year 50 million. And in this year they will make another investment, as we can see here, the purchase of another boat for the operational revenue of this month, and already made 20 million free cash flow. And there are two results. They round about another 20 million, so I expect the company to make 60 million in cash flow, beating the last year. And the stock is trading very cheaply. Is a great hike, no debt, being punished for macroeconomic reason, but will 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 go up eventually because of this part of the market cycle. So yeah, that's a great, no problem at all. Great company. No much to say more than this. The company is very good company. Uh, Solid. Is a surprise that the stock hasn't going up faster than this. Uh, Last year was a great run for me, and I expect this year to do good as well. The company, for my valuation, the company now's value to $9 and is trading at 4, so gives you a great margin of safety and is a great bet. So leave a comment, subscribe to the channel. Let's make some money together. Thank you.